Hey, welcome back, guys. I'm not a financial advisor, so whatever analysis I'm going to do, it's just my opinion, my expectation. That's all, okay? So don't just take it seriously. Do your own analysis. I'm here just outlining my things. So this is the risk disclaimer. I hope you will understand. Now, first thing is, if you can understand, I mean, if you can hear me, please let me know that. Write down something that you can hear me. Then I'll go for the later explanation about the weekly analysis or the top-down analysis. Okay, Peter Henry, $20 drama. Thank you, brother. I don't know you can hear me or not, but thanks a lot for that donate. I really appreciate it, man. This is the drama, guys. You're 54, Peter. Are you kidding me? Your profile picture looks like you were 28, something like that. Yeah, we can hear. Okay. Thank you, Sam. Hey, Robin, how are you, brother? Civil engineer. Hey, how are you, man? Thanks for joining. And yep, so here I am at Sunday. Very critical situation. First, I would love to come here. I don't believe you, Peter. You're 54. I don't believe you, man. Today I have posted this picture. Okay, maybe some of you will think this is just a picture, but it has a great deep meaning. Of I mean, for me, uh, you can see here. I bought a car for $9,000. I sold it for 12,000. I bought it again for 11,000. I sold it again for 13,000. Okay, how much did I earn? I am an old boy. I don't believe you, Peter. I don't believe you, man. So why this is important for me? I will tell that first. I will give you my opinion. Okay, I'm not telling you that this is the correct answer of this question, but I will just explain the way I think. Okay, so yeah, I bought a car for $9,000. I sold it at 13,000. So my profit is 4,000. I don't care about all of this. In between 9,000 and the last price, whatever happened inside those two prices, I don't care. Okay, what is the relation? I mean, with this picture, sometimes you will see I take a sell or buy, and maybe I close my trade over there. Then I do 3, 4, 5 times. There was a small profit, sometimes break even, maybe sometimes a small loss. Then finally I take another trade and I closed over there. So actually I see I started from zero profit, then I closed at 500 profit. So in between whatever I have done, I don't care. I just see the last price and the first price. Okay, until I'm not going to cross my daily loss limit, I will keep taking my entry. Now it's not applicable for you guys who are actually learning. You have to be strict with small trading. Okay, over trading will kill you, because the guy who are with me for long, you know that I don't change my bias instantly. Actually I believe my bias. Okay, I believe my direction. So when you are learning this concept at the beginning, you won't be that much confident, or you won't be able to change your direction when you have to change it. So that's why I tell you, don't over trade. Be strict with low trading. Like try one time, maximum 2 times in a day. If you are profitable, close your trade. If you are not profitable, also close your day. Okay, but don't over trade. If you do over trading, you will take a loss. Last week I was in green every single day with that much consolidation and that much big run. I was in profit. Overall, my last week profit was near about $7,000. Not bad, but it's cool. My whole theme is over here. I actually trade by this picture. Okay, and I can see I have a very similar thinking with rain. I mean, I just got astonished because yeah, I love his answer. Okay, so here 4K, 13K profit, 9K cost. I also think like that way. So here the profit is for me. 4,000, but I'm not telling that some of you actually write down something else, like some kind of profit. You are wrong. I'm not telling that. I'm just telling you that this is my thinking. Okay. So that was the answer for this question, in my opinion. I believe it will be helpful for you. Okay? And I'm not going to read your comment until I finish my weekly analysis. When I will finish my weekly analysis, then I will tell you. If you have any question, you please write it down to your notebook. When I will finish, ask me the question. Okay, I don't want to be distracted before finishing my weekly analysis or top down analysis. I didn't do anything yet. I will do it from the beginning so that every week you will be able to do that by yourself. The way I'm doing it, try to take it. Okay, so I didn't do anything. I don't know what is going to happen. I have no idea. I just opened my chart before this streaming, maybe 1 or 2 minutes ago. Before starting this streaming, I just put, push my chart to weekly chart here. That's all. I didn't do anything. The first job I do is I go to my calendar. Go to any kind of calendar. I love Forex Factory. I come here and I look for the medium impact news and the high impact news. Monday, we don't have any news. So the best option is avoid the Monday. There will be low volatility, more opportunity for the consolidation or the chopping market or the accumulation or the seek and destroy, whatever you say, that you will expect from Monday. The reason is there is no news. Now, if you are kind of guy, I have to take entry every single day. Try to change your perception, okay? Because this market, this trading doesn't work like that way. Every day is not for trading. Some days you have to sacrifice. You have to sacrifice, okay? I'm here in front of all of you guys every single day. That's why I push my button every day. Otherwise, I don't like to push my button every single day. Monday, we don't have any news. Try to avoid Monday. Just read the price. Do paper trading. Try to feel the market. Tuesday, we have a news at 8:30, the medium impact news. I believe that we will get little volatility over there. Still, USD is not good for trading for this week. Wednesday at 2 p.m. we have FOMC. Okay, so this is the FOMC I love to trade. Why I love to do that? Because 2 p.m. we have the FOMC statement. 2:30 we have the press conference. So this FOMC actually something like that. First move is the fake move. That means the 2 p.m. news will be the fake move. Then 2:30 p.m. the press conference will provide you the real run. Okay, so I will love to anticipate or take participate. I want to participate 2:30 run because this run will confirm my bias. If this is a bull run, I'm just giving you an example. Okay, I'm not telling that the first run will be the bull run. I'm just giving you the example. So it can happen like that way, something like this. It can happen like that way. The first move is the fake move. The 2:30 move is the real move, real run. Okay, I will be there. If I'm okay, then I will explain in live because near about 8 FOMC, I'm absolutely correct until now. But yeah, most of the time you will see the first move is the fake move, the next move is the real move. Okay, so that's the FOMC. We have that in Wednesday. I believe that market will, whatever will be our liquidity, market will go toward that liquidity in Wednesday. Then Thursday we have unemployment claims at 8:30. 9:45 we have PMI. At 10 we have home sales. I mean, 10 news is medium impact news, so we will see some huge volatility in Thursday as well. Then Friday we have Fed Chair Powell speak, which I really hate. I hate it. Fed Chair Powell speak is kind of, for me, most of the time I see the consolidation. I never heard ICT to tell anything about the Fed Chair Powell speak, how to trade that. I never heard it. Okay, so if anyone knows about that, don't forget to let me know because yeah, I really hate that news. Most of the time I see very choppiness and I lose lot of money because of that news, Fed Chair Powell speak news. Okay, so this is the only news I'm really afraid. So At 9 we have that news. I'm pretty much confident that I will be able to trade in Friday, because before 9:30 there is the news. Most of the time this news actually release at 10, not 9, at 10. So here when I saw it's at 9, I get little confident. Maybe I will be able to trade in Friday as well. So this is my familiar plan when I am going to anticipate my trade. In Wednesday, basically that's the best day for me. PM session, not the AM session. So until Wednesday PM session, I don't want to take anything over here. But as I will be there, so I will try to outline the price. You will see that if I will be there. Okay. Then Thursday morning session, I will start to trade my start my trading from 8:30, because we have the what to say, unemployment claims news at 8:30. So I will expect some kind of volatility over there. Then we have news at 9:45 PMI. I will try to catch that PMI before 9:45. So I will try to catch that news actually. Okay, so but this is forbidden for the new or the beginners. Don't don't try to catch the red folder news at your beginning. Okay, later you will understand how this thing works. It actually instant decision. Okay, this I can't outline beforehand. The red folder news, nobody can outline that beforehand. So you have to take your decision instantly over there. And at 10 we have home sales, so we will see how it works. And Friday I explained. So this is the factory, the news for the week. Now over here I'm gonna make it bigger. And guys, again, whoever is commenting, I'm sorry, I am going to reply, or I'm going to ask you, I'm going to give you the chance to ask me the question if you have any question while I will explain the price action over here. If you have any question, please mark the time frame, which time frame, sorry, what time actually your question is, for something like that. This candle created at Monday 4 2024. So you can ask me, brother, Monday 4 2024, just go over there, then why that low work like that way. So you will ask me that question like that way. So when I'm explaining this price action, write down your question. When I'll complete, ask me the question. In the meantime, I'm not gonna read your comment. I'm not going to reply you. Okay. So here is the dollar index chart, and this is the weekly chart. You have to start with your weekly chart. So what do you see? Last week I told you that market is trading, after trading this parallel gap, it's gonna go lower here. Not last week, before the last week here. So when it closed inside that inversion parallel gap, that is the inversion parallel gap. Why? This low failed to take that low. Here is the parallel gap which overlapped over there. Okay, so it market went higher. This is that first parallel gap. I explained the first parallel gap. I'm not gonna go with the first parallel gap. I'm just going with the inversion parallel gap. When market came here, closed inside that inversion parallel gap, I told that market is going higher. Okay, for some certain level. After reaching over there, market will fall again, because we have some liquidity around that area. When I'll be in daily chart, you will see that. Now let's see what we have in here. You can see this candle low and this candle high. There is a very small weekly parallel gap. So I would love to see market will tap to this parallel gap, then it will fall until this last parallel gap from weekly chart. So this is the first parallel gap as well as the last parallel gap. So when market is reversing, the first parallel gap turns into the last parallel gap. So I will expect market will reach until that last parallel gap at least. Then it will go higher or lower. We will take our decision over there. So that will be next week bias for me. If I see market break that parallel gap, see this parallel gap, it break not from the weekly chart, from the daily chart. I will observe the price from the daily chart. So if market started to go higher with this type of big run, energetic run, I will start to think market will reach until that low of that weekly parallel gap one more time, or to the rejection block. Any level will be triggered next week. It's not going to fall, or if it can reach over there instantly, then it will make a week and then it will fall, something like that. Okay, I will explain that when you will understand this. from when I will be in daily chart. Right now from weekly chart, what is my expectation? My expectation is this parallel gap will hold the price, send it back to that first parallel gap. That's my expectation from the weekly chart. Again, I will be very careful if this parallel gap is broken and market wants to go higher. I will be careful. Okay, that's not my expectation, but I will be careful for that. Let's go to daily chart now. So here is the daily chart. If you were with me last week, then I told that there is a there was an entry parallel gap from daily chart, and this is the last parallel gap. I told that when market will reach to that entry parallel gap, first you will look for sell. When it will reach over there, you have to look for sell. If market is overzealous, it will reach until that last parallel gap. So this is the last level. Why? Market went higher. Take the liquidity, market structure shift, first parallel gap or the entry gap. This is the last parallel gap. Market should not close above the consequent crossment of the last parallel gap. So it should not close above the last consequent crossment or above the consequent crossment. Okay. So you can see last week actually market reached until that last parallel gap. There was the sell setup. Remember, market went higher in NASDAQ. That was that run. When market went lower, we went higher and market reached to that entry parallel gap to NASDAQ. So that was that run from the entry parallel gap, the reaction. Then when it come back again to that volume balance, it went higher and we catch the lower run for the NASDAQ. So when dollar index is going higher, NASDAQ should go lower, something like that. Over here, if you see that from the daily chart, this low and that low, they are relatively equal lows. When market reach here to that last parallel gap, now my expectation is market will come here and it will take that sell side liquidity. That is my expectation. I'm not telling that it's going to happen. Right now I can see I have only the sell side liquidity. So I will go for that sell side liquidity. Do I need to see that next week? No, I don't need it. I just need a run toward that sell side liquidity, and that will be enough for me to be profitable. Okay, so I don't need to take that sell side liquidity, but I just need a run toward that sell side liquidity. At the same time, this is that first parabolic from weekly chart, if you remember. So market can easily come here until that first parabolic gap, then it can react some kind of reaction. Okay, so something like that. It will come here to that first parabolic gap, then it will consolidate sometimes, something like that. Then it will break this, it will come, it will work with that parabolic gap, then it will fall. Maybe the very next week it will fall and take that sell liquid. Something it can happen. Okay, but right now until from here to here, this is my range for this week. This is my direction. I don't need the price to take that sell side liquidity, but can market take that? Obviously market can do that. Market can easily come here the next week in Monday and Tuesday. By using 2 days it can fall, something like that. This type of big fall, it can happen by 2 days only, or maybe it will take 3 days to reach over here. That doesn't mean that it can't do that. Obviously it can do that. See, something like this big candle, just two big candle like that, it will take that liquidity. It can happen, but most probably market is not going to do that. Here is the part. Monday, you have to outline your trade like this way. Monday is actually the accumulation day. Then as I'm looking for sell side, Tuesday will be the manipulation day, so market will go higher. Then Wednesday, sorry, ah man, okay, whatever, let me remove it one more time. I will mark it one more time. So Monday will be the accumulation, something like this. Then Tuesday market will take the liquidity. Wednesday it will go little above, it will dramatically fall. Thursday continuation of the falling. Friday reset. So this will be your weekly analysis. As I'm expecting market will go lower, that doesn't mean in Monday market will open and it will start to fall. No, first market will go higher little bit, and you see this weekly parabolic gap. Remember, this is the gap from weekly chart. So in Monday market can do something like this, or it can trade to that parabolic gap. Then Tuesday it can go little above of that parabolic gap. Wednesday, by using the FOMC, it can expand lower. Thursday we have very big news, it can reach until that fair value gap, then Friday reset, something like that. I'll be very happy to see that. So this is kind of my expectation for next week. Now there is another thing from the daily chart. You see, this is a daily fair value gap over here. So this is a daily fair value gap from daily chart. And let me actually remove this. You know, there is the weekly fair value gap, right? So market can do one more thing. It can go little above, then it can tap to this daily fair value gap, then it can expand higher, something like that, until that breaker block low. It can retap over there. So I will be very careful about this daily fair value gap as well. So what will be my expectation? Every single day will pass. I would love to see something like that. It will come like this, here, 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 something like that. That means this daily fair value gap will be broken, and I will use this daily support daily fair value gap. I will use that support daily fair value gap as a resistance fair value gap. I will expect like that way. I don't want to see this daily fair value gap will hold the price. If I see market has any intention to use that fair value gap as a bullish fair value gap, I will immediately change my bias. Okay, this is how I change my bias. Now, if I change my bias, where will be my target? You can see there is no buy side liquidity. There is no buy side liquidity at all. I have this breaker block. So if it happens, then in that type of situation, I will go until that breaker block low. Until that level, I will be bullish if it happens, but that's not my expectation. I love to work with my expectation. Okay, in that type of situation, the weekly fair value gap and the daily last fair value gap will be broken. It will just broken. Now how will I frame my trade? See this last fair value gap, when it will be broken, I will expect some kind of rejection from the constant crossman. It will go higher, tap to the last fair value gap and reach over there. So something like this. Here I will frame my bull trade. Okay, something like that. So one time break, that is called fake breakout. Two time break, confirmation of the breakout. Finally, when it will tap to the last fair value gap top, I will frame my trade and I will go until that breaker block. Okay, so yeah, that's the thing. Okay, I'm not going to read your comment, guys. I'm extremely sorry. First I have to finish my explanation, then I will go for your comment. So this is two kind of situation. I'm just gonna explain the probability. Nobody can tell you where market is going next week. Everyone can just outline the expectation. What could be your expectation? Which one is more obvious to you? If you ask me, more obvious thing is market is going to break that daily fair value gap. It's gonna be break. That's for me. I'm bearish for dollar index now because market has reached to the last fair value gap from the daily chart, and it can go little above in Tuesday to trade that weekly fair value gap, if you remember. And then Wednesday we will take our decision where market is actually expanding. Now I'll go to hourly chart. Here I'm gonna remove this daily fair value gap from my chart, but you have to keep it on your chart. Now from hourly chart you can see what market has done. Market came here. Oh sorry, I actually forgot something to explain why I am bearish, actually more confident about the bearish. Market went higher, take that relatively equal highs, this shallow run, everything has taken over there, right? Everything has been taken. So I'm actually talking about here. See this shallow run, it has taken by that run. Now when this run stopped over there, it has made this liquidity, shallow run, again shallow run, but not this shallow run, this is new shallow run. So that was the obvious liquidity. Market has taken that obvious liquidity again by the body close. So there is no liquidity left. Market fall dramatically. Where did it reach? To that order block. Why that is order block? Market went lower, tapped to this fair value gap, taken all the liquidity, market structure shift. This is the fair value gap trade. The last down close body, I mean the lowest down close body is your order block. Mark the opening and the top of that candle. Okay, both of them level are the order block. So over here there is another order block. Which one you love most, you can go for that. For me, I love the opening, so I mark the opening. If it can trade the opening, I get more confident. market tap here. I just marked that volume balance, but you can see it is not kind of very much important for me for now, because ICT told this is the most weakest PDRA. Okay, so but yeah, still you can see the reaction from the volume balance, though it's weakest, but it has a very nice confluences over here. Basically, I saw market came here to that order block, so this is just a reaction, the reaction from the order block. Market always go for the liquidity. Okay, market never go for something else except liquidity. What is liquidity? Double top or double bottom, triple top or triple bottom. That's the liquidity. In our world, relatively equal highs or relatively equal lows. That's the liquidity for me. I'm not telling that session liquidity is wrong, weekly liquidity is, oh, sorry, weekly candle high, weekly candle low is wrong. No, I'm not telling that. I'm just telling, for me, double top is my liquidity, double bottom is my liquidity, which I called relatively equal highs, relatively equal lows. I have shown you. Today's Sunday, market is closed, so I am gonna explain everything in details. Okay, so some of you are new here, maybe it will be easier for you, but whoever with me for so long, this will be very boring for you. But yeah, I'm gonna do that. I'm sorry. There are three type of liquidity for me. First, here, okay, you see, just a second, this high and that high, they're relatively equal highs. I don't need perfect or same equal high. I don't need it. If it little lower, it's okay. Still, this is relatively equal highs for me, or same to same, relatively equal lows. You will just uh, think about the sell side liquidity. Okay, I'm just gonna give you the example for the relatively equal highs. Now, if this high is something like that, no, this is not relatively equal highs for me. I will, you will understand what is relatively equal highs. You will understand by seeing the market again and again. So as near the liquidity, I mean the high, that high is, I will mark that as my relatively equal highs. See this low and that low. Can you see how beautiful they are? Very near to each other, very near, right? Though it didn't tap to that low exactly, but still this is my relatively equal lows. Now, if this low was here, somewhere here, I wouldn't mark them as my liquidity. For example, if you see this high and maybe that high or that high, they are not relatively equal highs for me. Okay, but here, see this low and that low, they're double bottom. I mark them as my liquidity. So this is the first thing I mark from my chart. When I got that, there is another thing. Okay, market try to come here one more time to take that liquidity, fail and went lower. Now this, when I see this high has created over there, I called them most strongest liquidity. That means there was relatively equal highs, market tried to go to take that high one more time, failed to take that, and closed maybe very near to that relatively equal highs. Okay, something like that. It just closed over there. For example, this low and that low, they are relatively equal lows. Now this high is over here, sorry, this low is over there. If this low could come here somewhere, okay, and then went higher, then I would say that this relatively equal lows is now the strongest sell side liquidity. That means if you have relatively equal highs there, then market is not going to take that relatively equal highs before taking that strongest sell side liquidity. So here this high actually make the relatively equal highs more stronger. Now the obvious liquidity. What is obvious liquidity? If I see market went above that relatively equal highs or the single high, just think there is one high only. Okay, just one high or relatively equal highs. Just one high or relatively equal highs, but market went above, take that relatively equal highs or one high by the week, not by the body, just a week. The example, this high has taken by those, see, just a week, shallow run, I called it shallow run. If I see the shallow run, I called them as my obvious liquidity. Okay, this high has taken by that shallow run. See, just a shallow run, nobody closed above that. This is called the obvious liquidity. That means market is, I'm going to mark the last high as my liquidity. I don't care about anything else. Market is going to take that high. I know that for sure. 100% of the time. Now I'm not allowed to tell you that 100%. So I will go with 90%. Okay. So 90% of the time you will see market has taken that shallow run. This is the strongest liquidity in my opinion. This is only three type of liquidity I look for. Now there is another thing. You saw market has taken that shallow run, I mean sorry, that relatively equal highs or a single high by a shallow run. Then market went higher one more time. Okay, sorry. So when it has taken that shallow run, you will mark the high, right? So this is your the last buy side liquidity. And you saw market went little above one more time and went lower. Okay, again a shallow run. I don't give a shit to that area, not anymore. There is no more liquidity. There is no more liquidity according to me. You will see this as a relatively equal highs, but if a high has taken by a shallow run, again the shallow run is taking by a shallow run. I don't think this is my buy side liquidity, so that won't be my target. I hope it will be clear. If it is not clear, when I'm done with my analysis, I will ask you the question. You please write it down if you have any question. Okay. So far I'm expecting the this is just a reaction from the order block or the last fair value gap or the volume balance. So there is your last fair value gap, this candle low, that candle high. So this area is a volume balance as well as a last fair value gap. Market came here, tap to that order block, that is my most priority. Market went higher, this is just a reaction. Now I'm expecting market will fall. Okay, market will fall, that's my expectation. But as I explained, this fair value gap, the daily fair value gap, I will be very careful of that fair value gap. Now here is the hourly chart. Now market came here, take all of the liquidity by that run, right? After that, what market has done, market came here. Let me actually remove these two lines. I outlined that. Okay, so I don't need that anymore. Market came here, little consolidate, went higher, trade that fair value gap, went higher, went lower one more time, went higher. When market trade in that area, what do you see? I see this is just a low, this low and that low. They are relatively equal lows. When market came here, it has made that relatively equal lows more stronger. Now you can mark this low and that low as your relatively equal lows. Okay, so I'm gonna remove this low. So this can be your relatively equal lows or the sell side liquidity. Remember, this can be your sell side liquidity. But when I see this low and that low, they are relatively equal lows, so I will go for this low. Now look, what is the differences? See this low, I'm not gonna mark that low as my sell side liquidity here. This low is not my sell side. This is from hourly chart, guys. Okay, so this is not my sell side liquidity. My sell side liquidity is over here. That means after take, this is from hourly chart, try to understand. Now I am here in 1 day, so 1 day price action, not weekly price action. My intention is not weekly, I will observe the price by daily basis. Now so from daily basis I have this sell side liquidity. This is the lowest low. I will find out first fair value gap around that area. If you have watched my last uploaded video, I explained and I showed you two first fair value gap example over there. So if you are interested, you can watch them. But here, this is the area where I will look for the first fair value gap. Okay, so something like that. Sorry, here. That means market will come here. It will take those lows. It will fail to take the lowest low. Then it will go little higher. There will be a fair value gap that will be overlapped. Market will tap to that overlap. Then it will expand higher, little higher, or it can expand more higher. I don't care about that. But yeah, I will get an some kind of reaction over there from that first fair value gap. So this is the area where I look for the first fair value gap. That's why the single low, I don't care about that. I don't see that as my liquidity. Eventually market is going to take that liquidity. Why? Because this is the weekly fair value gap where I'm expecting from weekly basis that market is coming here. I know guys, it is little confusing. I'm giving you so many information. or so many talking. I don't have any idea how can make it more simpler, but this is how you have to do it. Okay. So if you are confused, you can rewatch the video or the way it will help you. But if you don't take the notes, if you don't do the things like the way I'm trying to explain, it's gonna be very difficult for you to understand. Okay. So this is that last fair value gap from daily chart. Now look over here. See this price run. I can see a hourly fair value gap over here. So this is the last fair value gap from hourly chart. Let me mark it. Yeah, here. So this is the last fair value gap from hourly chart. Price is right now at the entry fair value gap from the hourly chart. Now the fact is, remember there is the fair value gap from weekly chart as well. So from weekly chart we have a fair value gap. Price can reach until that hourly last fair value gap, then it can fall. When it is going to fall, see how many fair value gap do I have? One, two, three, four. I have lot of fair value gap over there. That means this is very messy. In that type of situation, I go higher time frame to look for one fair value gap only, just one fair value gap. Here also you can see from hourly chart, above this last fair value gap, this is very messy. See from hourly chart, it's very messy. Lot of fair value gap over here. That's why I will be in 4-hour chart. Again, guys, don't refer me the time frame. I know which time frame is important for me, and I only go for that time frame. So don't refer me. I'm explaining here to you when I go to hour, I mean 4-hour chart, and when I stay in hourly chart. From hourly chart, one more time. How many fair value gap do you have? One, two, three, four. You have four fair value gap over here. Uh, Above the last fair value gap, you have one fair value gap, two fair value gap, three fair value gap, four fair value gap. Very messy price action. Just go to your 4-hour chart, make it smaller, make the range more smaller. So now I am in 4-hour chart. So above this fair value gap, you can see this is the last fair value gap from the 4-hour chart. Okay, so market can easily come to that last fair value gap here, then it can fall. Now remember there is your weekly chart, weekly fair value gap. As I'm expecting market will go lower, what is the rules? Monday will be the accumulation, Tuesday will be manipulation, Wednesday will be expansion, Thursday continuation expansion here. So this manipulation day, market can reach until that last fair value gap from 4-hour chart. Okay, it can reach over there uh, for the what to say, for the manipulation day. Okay, overall when I will see market is going high, how can I be so sure about my direction? Because I know this thing. I have uploaded the videos in my channel. You will see that in narrative folder. In narrative folder, I explained everything over here. Okay. If you remind this, if you can remember this, when your expectation is market is going toward the liquidity, where is your liquidity? You have from hourly chart, you have liquidity here, and from daily chart you have liquidity here. So where do you have the liquidity? Lower. So you know eventually market is going lower until it proves you wrong. You have the liquidity to the lower side. If you see some kind of higher run, you won't be very panicked. Why? Because you know this is the narrative. Monday it was accumulating, Tuesday it went higher for manipulation. Where did it reach? To that last parabolic. Logical, just logical. It reached to that last parabolic. Wednesday you got the expansion. You won't think that market is going to retrace from there in Wednesday. Why? Wednesday is the expansion day, so it will keep going lower, keep going lower, keep going lower. Every time it will go higher, it will go higher to take the liquidity. Or if you see in Wednesday market is actually going higher, so when you will see this type of run, you won't think that market has traded some kind of fair value gap, now it is reversing, because that was a huge run. No, every single time market is coming lower, it is coming lower to take some liquidity. After taking the liquidity, again, 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 something like this. So you will avoid this run in Wednesday and Thursday. You will avoid this run. How can you be so sure that market is actually falling? You will get that when it will actually break some kind of huge level. Then you will anticipate that you were wrong and market is not actually going higher, it is going lower. In that type of situation, maybe you will miss the whole run. Doesn't matter. Sometimes it's going to happen, very rare, but most of the time, if you just know the narrative, you are going to be the profitable. So yeah, some days you are going to miss some trade, but you have to understand the fact, okay? So you can't take, I mean, anticipate the price opposite way, which, I mean, what is that word actually? You just can't expect the price in opposite way. Okay, if you are looking for sell side, every single time market is going higher, you have to let it go. You are not going to anticipate or participate to that run. You are not allowed for that. Now at the end of the day, if you see market never fall, or maybe it was fall little bit then went higher, you take a loss, just let it go, because you tried to trade with your expectation. If you don't expect something from the market, you are just wasting your time. So you have to give the lead to the market. You have to give the market your lead. Market go from there to there, you have to give the lead. Now if you see market is actually listening to you, then you will take the entry. If you see market is not listening to you, it is not listening to you, you won't do anything. Okay, you just don't do anything. You will let it go. You will sacrifice every opportunity over that day, and later you will come back and you will try to find out if there was any opportunity to take entry according to your expectation. Was there anything or not? If you see there was nothing, you'll be very happy. If you see there was something but you missed it, you will learn it from there. Okay, remember, nobody can learn this trading through their winning trade. Everyone will learn this trading by their mistake. Okay, so yeah. So I guess dollar index is pretty much clear to you. When I'll be bullish, if I see market come back again to this breaker block above the constant crossment of that breaker block from the daily chart. Let me show it over here. So from this breaker block, high, low, higher high. The lowest down close candle is my breaker block. If I see market went above the constant encroachment of that breaker block from daily chart, then I will start think, okay, market is not going to fall, it's actually going to go higher until the rejection block here or the constant encroachment of the daily fair value gap. So that is another daily fair value gap. You can see the last fair value gap from daily chart. So until there, market is actually going higher. Okay, after that I will change my bias, but until it's not broken, I'm bearish. So I'm done with dollar index. Now I'm gonna read your question. If you have any question or if you have any doubt, anything you don't understand from here, please ask me the question. I will explain that thing. Okay, thank you. So I will, this is the time for asking me the question. I'm not gonna read your comments, whatever you have written over there, I mean beforehand. I'm not going to read all of them. Okay, so if you have any question, please let me know that right now. Oh, sorry. What's that? Uh, 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 uh. Stop messages. Or what was that? So every message, including potential spam. So most messages with potential spam removed. I don't know what was that over there. Okay, just let it go. So basically, stick to one bias until you are obviously wrong. Absolutely, big mode. Absolutely, brother. Anybody has any question about the dollar index? If you have any question about the dollar index, please ask me that. Otherwise, I'm going to go NASDAQ. Okay. At the same time, guys, please don't forget to give me a like. I'm a very small YouTuber. Okay, I'm a very small YouTuber, and yeah, I don't have that much fan and followers. So if you guys keep liking the stream, I hope that YouTube algorithm will help me to spread. Okay, so there is no one actually, no famous one who is going to advertise for me. I am the one who has to advertise for myself. So thank you. I hope you'll understand, brother. Please don't forget to give me the like. Why is the breaker block an invalidation level for shorts? If you would love to take your short, Look, this breaker block here, this breaker block, when it tapped, it went lower, take this liquidity. This liquidity has already taken. So this breaker block actually has done its job. It has done its job. Sometimes, very rare, price retest the breaker block. Very rare. Price retest the breaker block, then fall again. Now that is why this breaker block is not enough to frame your trade from there, because it has already done its job. If it failed to take those lows, then I would say that if it can tap over there one more time, you will frame your trade over there. Right now, I'm expecting you will frame your trade from this last fair value gap, or above the weekly fair value gap, or the last fair value gap I explained from the 4 hour chart. Okay, thank you. NQ, liked bro, you will have lots follows. Thank you, PDS. Thank you, brother. So I guess you don't have any question about the dollar index, so I'm going to move to NASDAQ. Guys, do you really understand what I explained, or you just think? I mean, why don't you guys question me? I see that most of the YouTubers got a lot of questions, but here in my either I'm very good at explanation, or I am really so bad that you really don't understand anything, something like that. Okay, just let me know. What am I actually? Bro, if we have relatively equal highs above, then Thursday night 7 candle would be our first fair value gap. No, first fair value gap will be, I mean, first fair value gap I will explain later. Okay, right now don't just go for the first fair value gap. Please, that's my request. Please don't just go with the first fair value gap. First fair value gap, I will, when time will come, I will explain the first fair value gap. Okay, so yeah, please right now, please don't go with the first fair value gap. Thanks, brother. You are most welcome, Shahid. But why did you give me the thanks? Okay. Good explanation, bro. Thank you. Thank you, man. No problem, Big Mode. Your explanation is enough. Okay. That's a big, great compliment for me. Yeah, brother, I understand DXY well. Okay, Robin. Thank you, brother. Good explanation. Thank you, PDS. I asked, bro. Amash Lama, what did you ask? Okay, Amash, read above. Okay, what was your question, Amash? Bro, if we have relatively equal highs above, then Thursday 7 candle would be our. Okay, if that was your question, brother Amash, I just told you that I don't want to explain the first fair value gap right now. I will go the first fair value gap later. Okay, just accept the first fair value gap. If you have any question, you can ask me. Right now, you don't need the first fair value gap. Okay, Peter Henry, great explanation. Thank you, brother. Thanks for that. That's compliment. How do you recognize the order block and how do they affect in the market? You don't need the order block. You just can go with the first parabol gap. Toxic Bubba. I guess, brother, you are new. Okay, that's why you are asking me the order block now. The only thing I don't talk about is the order block. Just only thing. But even after that, I explained what is order block and where it actually uh, create everything I explained. Still, after telling that I don't want to talk, I don't want to talk, still I talked about water block a lot of time. But yeah, all analysis should match. That's a nightmare. Night, yeah, man. It's kind of that things. Okay, you have to be specific. You have to be specific with your direction, with your expectation, with your everything. Okay, if you see it's not matching, you will just let it go. Okay, one every week you will be profitable. It is never going to happen at least at your beginning, but later, yeah, it's possible. Every week to be profitable, it's possible, but you need more experience. You are good at explanation. Thank you, Big Mode. I have watched 99% of your videos. Peter, that's a lot of work, brother. Lot of work. Night, you too. Really, man? So boring. It's so boring, and my English, that's why it sucks. But thanks. If you get something from there, that's cool, man. Please tell me once more about entry fair gap. Okay. Explore everything world. Okay, I'm gonna explain the entry fair gap for you. Okay. Let me come here. What is actually the entry fair gap? I'm gonna give you an example from the previous price action because market is closed right now, and I'm gonna give you the answer from 15-minute chart. Market has taken the buy side liquidity. Okay, so this is your buy side liquidity over here. It has taken over there. Then you get a market structure shift over here. So this is your market structure shift. After getting the market structure shift, you will go for two fair value gap. The first fair value gap will be your last fair value gap. So this is the first fair value gap, which is called the breakaway gap. This fair value gap is called the breakaway gap or the last fair value gap. There is little difference, but right now you understand that this is the last fair value gap. If you see there is another fair value gap over here, just for example, if you see there is another fair value gap which is above the buy side liquidity level. This is your buy side liquidity level. Okay, here if you see there is a fair value gap at the level of the buy side liquidity or above the buy side liquidity, then you are going to ignore that fair value gap. But later that fair value gap will be your last fair value gap. For example, there is another fair value gap around that area. Here there is no, but if there was another fair value gap, I don't care when this setup formed over here. Okay, this I don't really care because this is above the liquidity level. Market doesn't need to go over there. This area market doesn't need to come back over here. This area, this whole area, market doesn't need to come back over here. Now as there is no other fair value gap, so this is very easy for me to tell this is your breakaway gap or the last fair value gap. Okay, do you understand what is the differences between last fair value gap and the breakaway gap? After the last fair value gap, the very next fair value gap is your entry fair value gap. So over here, this is your entry fair value gap. So when market will come back again to your entry fair value gap over here, first you will expect some kind of reaction from that entry fair value gap. If you have very clean sell side liquidity, you will expect that market will reverse from that entry fair value gap to that liquidity, that sell side liquidity. So over here, that was our sell side liquidity around that area. So here you will expect that this entry fair value gap will hold the price, send it back to that liquidity. If market is overzealous, then market can reach to that breakaway gap, but body can't close the body. Okay, the body, it can't be closed above the constant encroachment of that last fair value gap or the breakaway gap. Wick can go little higher, okay, above the last fair value gap, though it is very rare, but sometimes it will go higher. You will be stopped out. So many things will happen. Nothing is worked 100% over here, but it is very rare. So most of the time what you will see something like this. It can reach until the constant encroachment of the last fair value gap or the breakaway gap. Both are the same in that type of case. I explained when you will look for the breakaway gap and the last fair value gap as well. So it will go lower. Now when it came here and it has done its job, I don't need this fair value gap, not anymore. This fair value gap is done its job. Now if you go for the balanced price range, this price range is not balanced yet. Okay, so this is not balanced yet. Zero masses. Okay, I guess I don't need that one. It is not balanced, so still I kept it in my chart because this is not balanced. But if you look for only the fair value gap, then it has done its job. You don't need that one, not anymore, because next time when market will come here, you will see no reaction from there. I mean, you should not expect some kind of reaction from there. Now this last fair value gap is the most important fair value gap for me. Okay, so this last fair value gap is the most important part, but this is, as this is not balanced, still it's not balanced, so I need that one. So that is the entry fair value gap. Okay, brother. Now till now it's clearly understandable whole explanation. Thank you, Kitan Patel. I can see new names actually, but whatever. Welcome to everyone to my channel. Okay, welcome to everyone, and thanks for huge subscription. Last week I got huge subscription near about 400, sorry, 376 subscription I got last week. So I can't just tell you how happy I am. Okay, so you can see I am very close to 4400. Just 10 people left. After that it will be 4400. So it will be a round figure over there. Thanks to all for subscribing to my channel. Thanks to all. Okay, yeah. So I believe that I gave you that first fair value gap. Okay, what's first fair value gap? Lol. Winston, I already explained that. Okay, love gun fair. Okay, I would like to thank you for doing the live stream. Really helped me to reprice. Thank you, Andre. Thank you, brother. Big mode. Do you mean any fair value gap above the rated buy sell liquidity is the breakaway gap? Okay. Again, I'm just going to explain this one more time. Okay, as you have the confusion, I'm going to explain this one more time. So first, you are expecting market will go lower, so you are looking for a setup here. Okay, this is the first thing. You are looking for a setup here, a sell setup. You mark this as your buy side taken. Okay, so market has taken that buy side liquidity. Now this is at the all-time high. If that was not the all-time high, you will look for some kind of last fair value gap around that area or the entry fair value gap. But as this is all-time high, you just expecting that market will go lower without any conferences before the price action. There is no price action. This is your buy side level, right? This line, can you see this high and that high? They're relatively equal highs. So this is your buy side liquidity. Market has taken that buy side liquidity with a shallow run. When you will see that shallow run high is your actual buy side liquidity. So now this is your buy side level. Price went higher, broke lower with a huge displacement. If you see there is a fair value gap at the level of this line, this buy side liquidity line. For example, just think there was another fair value gap. Okay, that means this fair value gap is at the level of the buy side liquidity, or there is a fair value gap which is above that buy side liquidity level. Both of them, the buy side liquid, I mean fair value gap, I don't care. For my setup, I will mark the first fair value gap below the buy side level as my last fair value gap or the breakaway gap. So I am just ignoring this fair value gap for now. Later, it will be my last fair value gap. Right now, where is my last fair value gap? This one is my last fair value gap. But when I'm expecting the setup here, I don't give a shit to that fair value gap because this is at the level of the buy side liquidity or above the buy side liquidity. So I don't care about this buy side liquidity when I'm expecting lower run with this setup. When market trade over there and take the liquidity, now market is going higher, right? Market is going higher. When it is going higher, I will give my full attention to that fair value gap. Now this will be my entry fair value gap. This fair value gap I don't care. Okay, this fair value gap I don't give a shit. Here this will be my entry fair value gap, that will be my last fair value gap. But when I was expecting the setup, then this is my entry fair value gap, this is my breakaway gap. I just forget this fair value gap. I believe that it's clear now because I don't know how can I make it more clear. Okay, so yeah, that is the setup. Thank you for understanding. Okay, today's Sunday, so I am just talking too much. But by the way, guys, thanks a lot for subscribing to my channel one more time, and congratulations one more guy who actually subscribed. Thanks to all. Okay, thanks to all. Now, yeah, wow, that's a lot. Thank you, Jen. But yeah, so if price reaches the last fair value gap, it is expected to go lower again, or do you have to wait to see if the candle close below or above the inversion fair value gap? Toxic Bubba, you will expect the reaction. That means market is going higher or lower. That will depend on your liquidity. If you have a buy side liquidity, clean buy side liquidity, then you are going to expect that the last fair value gap is going to be broken. So you will expect something like this. It will come here. You will get some kind of reaction. Then basically it is going to break that last fair value gap. If you see there is a last, I mean, for example, you saw that market didn't take that liquidity, so over here market came here very near to that liquidity here, right? When I saw that and market started to go higher, I was in live, I told that until reach to that entry fair value gap, at least market is not going to fall and it's not going to take that sell side liquidity. So I will actually frame my trade over there. So where market is going, it will depend on your liquidity. It's not going to depend on your fair value gap. But how do you use the last fair value gap or the entry fair value gap? Always you will expect some kind of reaction. If you are bearish, you will get the reversal from the entry fair value gap or the last fair value gap. If you are bullish, then you will get a reaction from the entry fair value gap or the last fair value gap. So this is reversal. Let me tell you, okay? This is reversal, and this is called reaction. Just little, it go little below, then it break the last fair value gap. So you have to understand the liquidity first. Then you will use the last fair value gap or the entry fair value gap. You have to stay with me some more days, then you will understand how to use the last fair value gap or the entry fair value gap. Okay, you will frame your trade from there, or you are going to expect the reaction, just a reaction from there. It will be clear. Okay, brother. Thank you. And you can see to the comment box there is a link. Join my Twitter. So if you guys interested, you can join to my Twitter as well. Okay. So guys, thank you for asking me the question. Whatever, I'm gonna now explain the NASDAQ. Okay. So this time for go to the explanation of NASDAQ. So I'm not going to read your comment now. Hey Dio, good timing, brother. So I'm not going to read your comment now until I finish the explanation of the NASDAQ. So when I will finish my NASDAQ explanation, if you have any question, hold it. When I will finish, ask me the question. Okay. Now I'm using NQM 2024 NASDAQ June contract. You see, this is the what to say. I mean, the price action. Okay, very small price action. So if you want more price, you can go to NQ1. That is called running contract. Over there, you will see an option to the right bottom called B hash ADZ. Okay, so adjusting the price. If you set it 1, then you will get the real price action. Okay, so I mean, changing the contract, you will get that, but I really don't need that because I know where market is exactly now. I don't have any price action over here because this is at the all-time high. Okay, so when it is all-time high, then what is that? Whoever getting a reply for a comment is more fortunate because it is not going to happen after 6 months. He is going to have 1 million subscribers. No, it was a nice joke, man. But thanks for that compliment. Yeah, we believe something. Then if it 1 million subscriber, oh man, whatever. As market is at the all-time high, what is that level? That buy side liquidity. Okay, I'm gonna explain one more time that buy side liquidity first. Then I will go for the explanation one more time. Okay, why I marked that level? Again, I am not telling that it's going to happen. I would love to just a second. Normal. Okay. I would love to come here, and I would love to mark my fib to the down close body to the up close body. You see this level is actually at the level of minus 1.5 standard deviation, minus 0.5, minus 1, minus 1.5, minus 2, minus 2.5, minus 3. For me, minus 1.5 standard deviation and minus 2.5 standard deviation is the most strongest level for me. Okay, I'm not going to predict the all-time high. Again, guys, don't misunderstand me. I would love to see when I have seen that this minus 1 standard deviation has been broken by a body. I would love to see market will reach at least to that minus 1.5 standard deviation. And ICT told when market is at the all-time high, you will keep taking buy until it proves you wrong. Still, I'm bullish. Last week I was bearish. I explained last week why I was bearish, but still I'm bullish until market tap to that one minus 1.5 standard deviation or the level I write down my buy side liquidity. Okay, so over here, if market can tap over there, I will see the body again, how it close. If I see a body close above that minus 1.5 standard deviation, then I will go for minus 2.5 standard deviation, and I will start to believe market will reach until that minus 2.5 standard deviation, then maybe it will reverse. So right now I'm going to weekly chart one more time. 1 2 3 4 5 6 7 8 8. Yeah, after 8 candle, then I got a bear candle. 1 2 3 4 5. After 5 candle, there is a bear candle. 1 2 2 bear candle. What do you think? After this big run, market is going to fall? I don't believe like that way. I'm thinking this. Sorry, I'm just thinking this, just a retracement. Okay, market has retraced to that order block. What is that order block? That is the middle order block. Remember when I actually explained my trade sometimes from 1 minute chart, I marked some order block and I told them this is the middle order block which has the power to stop the price, send it higher again. Okay, so this is that order block. Okay, I'm gonna mark the mean threshold of that order block. Here is the mean threshold over there, and this is the opening of that order block. So I'm not going to write down this. I don't know, it will stay here. Okay, it is going to stay, and this is the mean threshold. All I want to see, nobody will close below that mean threshold. Okay, I didn't know that it respect like that way, very clean way. But last week I told that I would love to see this order block, how it react, if it can hold it or not. Now, until the mean threshold, until this is not broken, I'm pretty much confident that market is going to go higher. Okay, this is the weekly chart for NASDAQ. So from the weekly chart, it went lower. I'm seeing this order block as my change in state of delivery. That means market is going again for that buy side liquidity. Okay, will the body close above the STDB, standard deviation, be one monthly time frame or daily time frame? Obviously monthly time frame, brother. Obviously monthly time frame, because that standard deviation I'm getting from the monthly chart. So I need to see that from the monthly chart. Okay, big mode. But hold your question, because I'm not gonna read your comment. I'm not seeing over there. You're lucky. I just saw over there and I got your question. But yeah, just hold your question and ask me when I'm done. So this is that order block level and the mean threshold level. That means the 50% of that order block. What is that order block? Basically, this is the order block which has the power to send price back for the buy side again. This is not a perfect order block. This is kind of order block that appears into the middle point of the exact run. So if I am thinking market is coming here to here, then at the middle point it will appear. This type of order block appear. Now this is another swing. So if I am thinking that market is coming actually from here to maybe until 2.5 standard deviation, something like that, or maybe minus 2 standard deviation. There is the minus 2 standard deviation. So this is at the middle point. Again, let me show you. Market is coming maybe from here to here, to that. I'm just here. Okay, so this is at the middle point. So at the middle point, this is the, not exactly, but at the middle point, this is that down close candle. It's kind of that type of situation which is called the measuring gap. You know about the measuring gap, the 50% exact 50% fair value gap. This is kind of order block. Okay, so this order block has the power to stop the price, send it back toward the buy side liquidity. Now every single tick above here is your buy side liquidity, the strongest buy side liquidity. Why? Because this is all time high. Okay, you don't have any relatively equal highs, you don't have any weekly high, monthly high, anything. You don't have anything except the all time high. Every single time market will go higher, every single level or every single tick, every single handle is your strongest obvious liquidity, buy side liquidity. So far market is actually holding the price. I am believing that market is going higher. When I will change my bias, if I see this swing low is broken, this is broken, not from weekly chart, from daily chart. If I see from daily chart, it's broken, you know, some kind of energetic run with a very nice parallel gap over here. Then I will start to think, okay, I'm done. I'm done with the bull run. Market is going lower until any of this parallel gap. So last parallel gap, entry parallel gap. Any of these two parallel gap will is going to be triggered. Any of this parallel gap. If you ask me, I really don't want to see that until market at least tap to that buy side liquidity level. So that level should be tapped. After tapping there, then market can fall. Nothing wrong with that. But until now, I am bullish. As market is at the all-time high, it's nearly impossible to frame the trade or frame the direction. Nobody knows when market is going to reverse. Nobody knows. So I am just going to get an idea. That's all. Until it proves me wrong that market is going to fall, I'm bullish. So every level I will get, I will see that as a bull run. If I start to see market is falling dramatically below that low, I'm gonna change my bias for short period of time, and I'm going to think that market is going to tap over there or over there. Okay, so that any of this parallel gap will be my target. Then until then, I'm bullish. Let's go to daily chart. Now, guys, if you want to keep that mean threshold on your chart, you can keep it. That order block you want, if you want, you can keep it. I'm not interested. Okay, so it's your job what you are going to do. Now, over here, what market has done? This is the daily chart, right? Market has taken some liquidity over there. Some liquidity has taken over here. Market structure shift, fair value gap trade, went higher, trade that fair value gap one more time, cleared all of this sell side liquidity. What should it do? Boom. It should go higher. Again, exactly what happened over here. Exactly what happened. That was your first frame of trade. Market has taken the liquidity, market structure shift, first fair value gap, last fair value gap. Okay, let me actually mark it here from the very beginning. So that was our last week analysis. So I actually removed them from my chart, but I'm gonna mark it one more time. That was the market structure shift over here. This is the first fair value gap or the entry fair value gap around that area. This is the first fair value gap. This is the last fair value gap below here. This is the last fair value gap. Price tap to the first fair value gap, went higher. The lowest down close body is your order block. So you can mark that level, or the top of that candle is your, both of the level is the order block. For me, the opening is more easier or convenient for me. Okay, the opening. Market tap to that order block, went higher. When it went higher, this fair value gap should be unfilled. This is that unfilled fair value gap. If market can close that fair value gap perfectly, then I will look for a breaker here. If market can close that fair value gap perfectly, then I will look for a bullish breaker around that area. If it failed and it just liquidity taken, I am not expecting some kind of reaction. Something like that. Market is going higher, make a fair value gap, price tap to that fair value gap, then went higher. No, market should not give you any chance over here to take any kind of entry, because this is that real order block where it has tapped over there. Market retested that order block, went higher, taken all of this liquidity. It should dramatically go higher. Okay, no hesitation, something like that. No hesitation, it will just go higher. At the same time, I will expect that from the daily chart, not from the hourly chart or 15-minute chart. You know from where 15-minute chart, what can be happen from 15-minute chart or the hourly chart. It's gonna be consolidate in Monday, then in Tuesday it's going lower, take all of this liquidity. Wednesday, by using the FOMC, it will go higher. Thursday, continuation higher. Friday, something like that. Okay, it's not going to take that buy sell liquidity. Don't think like that way, it's going higher that much. No, but overall that is my expectation, that market will go like that way. So that low run will happen in Tuesday actually, or yeah, we will see that how it will react. But from daily chart, so far I can see market has taken all of this liquidity, no liquidity left here. There is no liquidity which is left here. Market should go higher now. That's my expectation from daily chart. Now guys, I'm doing this the way I do every week. Okay, if I see this parallel gap is fully closed, still I'm bullish, because after that I will look for a breaker, bullish breaker. Okay, something like that. It just closed, it went little higher, it closed here. This low, between two low, the highest up close candle will be my breaker. Market will go above that breaker, it will tap to that breaker one more time, go higher, something like that. If it can, it is able to break, I mean close that fair gap fully. If it fails, then I will expect some kind of order block here. That means a very nice bull candle, it will tap something like that, something here. Okay, so this will be the order block. Market will tap to that order block, boom, just this type of thing. I will expect that from daily chart if it fail to break that parabolic gap. Now if I see market is coming lower, 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 and finally it has taken this low, I mean from weekly chart, let me mark that low one more time, here, here, right? So let me go to daily chart. See this low, not that one, I'm sorry. See this low. If I see it's broken with a very big run, I'm gonna change my bias, and I'm started to think the bull run has done. Now market is going lower until the last parallel gap or the entry parallel gap from the weekly chart. Until then I'm bearish. Then maybe I will change my bias again or something like that. I will do that next week if I'm alive. Then I will do that next week or the after next week, something like that. But yeah, oh man. So if you ask me what is my expectation, bull. I'm expected that market is going to take that buy side liquidity. Okay, I'm expected that, but as I explained, that will be my expectation. I will see that. Now I'm going to remove everything from here, everything. Okay, I don't need those. Now I'm coming to hourly chart. So here is hourly chart, and if you remember, there was the sell side liquidity over here. I'm gonna mark the sell side liquidity one more time for your understanding, clear understanding. So this is the sell side liquidity from hourly chart. Below here, this is the entry favorable gap, this is the last favorable gap. Okay, so this is the last favorable gap from hourly chart, this is the entry favorable gap from hourly chart. Where market came, it has taken that sell side liquidity, perfect, no problem with that. Where did it reach? Just above that hourly favorable gap. What do you think, what is that level? That is a random level. Market should not reverse from a random level. Market should not reverse from a random level. I'm gonna repeat that word again, again, and again. What is this level? Entry parabolic gap from hourly chart. Below hourly parabolic gap, there is the last parabolic gap from hourly chart. If market would love to go higher now, it has to reach any of this level, either this hourly parabolic gap or that last parabolic gap. That means in Monday, I will expect something like this. Okay, so maybe it will tap to that hourly parabolic gap, nothing wrong. Then in Tuesday, either it will take whole liquidity again, or it will reach until that last parabolic gap. Wednesday, it will just go little below and boom. Thursday, boom. Friday, retest. That is my expectation for this week. Now, if I see market actually went higher, okay, to that parabolic gap. At the same time, it has made another parabolic gap over here. Tap over there, went higher. What I'm going to do? I'm not going to anticipate any kind of buy run. No, I'm not bullish, because I'm seeing this market is reversing from a very random area. So this is a random level. I don't like it. I'm not going to be going to participate in any of this run. In FOMC, around that area, if market reach around this area, then I will go for that buy side liquidity. Otherwise, I'm not confident, because every time market will go higher, I will see this market is going higher to take the liquidity. Then it will come back again here to that level. Why? Because it has reversed from a random level. So yeah, in short, that is the explanation from hourly chart. I am going to go 15-minute chart, and you see from 15-minute chart it's really so messy. Okay, over here lot of fair value gap, thousands fair value gap over here. I don't want to participate over here as from 15 minute chart. That's why I marked the hourly chart and the hourly last fair value gap, and you can see here is the fair value gap from 15 minute chart as well. So yeah, I'm not interested from 15 minute chart anything, but overall you can see after taking that sell side liquidity, market started to consolidate, because when I saw market started to consolidate, I started to believe this week market will tap this hourly fair value gap first. So it can stay here sometimes, I mean something like that. In Monday it can do something like that, it will make some kind of this thing here. Then Tuesday it will take all of this liquidity, it will closed here. Wednesday it can go below that low for that last fair value gap, or it can just tap over here to any kind of last fair value gap, then boom. So this will be my uh, narrative, okay, for next week. I don't know guys, is it clear to you or not, is it confusing or not, but I tried my level best to make it clear. I i tried my level best, okay. So rest upon to you. If you think it's clear to you, I'm happy. If it's not, then yep, I'm sorry. Peter, yeah, I'm done. I'm done. Okay, I'm done. I'm just done with my explanation or my exacting. And guys, one more thing. Okay, I just forgot that everything can be changed depending on the Sunday open. If I get a huge Sunday open, like see this is the closing. So I saw Sunday open here around that area. Then everything I explained, everything will be changed. Or maybe Sunday open happened here. So there is a huge gap near about maybe 50 handle gap, then whole I mean explanation will be fully damaged, okay. Nothing will be worked, because in that type of situation we have to use the weekly gap. We will we have to use the weekly gap. The whole hourly fair value gap, every single thing will be useless. So for dollar index and for NASDAQ, new week opening gap is very much important, okay. Yeah, so that's thing, brother. Okay, Peter, so true, very true. Okay, I guess you are supporting Nair for that 1 million subscriber. Oh man, will the body close above? Okay, okay, I gave you the answer, Big Mode, I guess. When you mark the min threshold, do you always include weeks of the order block? Obviously, the always, if you want to mark the min threshold, you have to mark week to week, no body to body, never ever, because order block is actually create from week to week. If you mark body to body, it's kind of you are forcing market to give you an level, okay, so you can't do that. Perfect explanation as usually. Thank you, Alina. Thank you, brother. I really don't know, it's sometimes I feel confused that are you guys getting my point, or I'm just talking and I'm just talking, okay. But yeah, if you understand, I'm very happy. Good evening, brother. Just came now, I will catch up. Okay, Ryan, no problem. I'm just done, okay. I'm just done with my explanation. I believe that if anyone has the question, I will reply to you. If nobody has the question, anything else I will explain. Otherwise, I'm done with today's explanation. And okay, thanks for unsubscribing, brother, whoever unsubscribed. But yeah, thank you. I believe that tomorrow I will hit 4400. So 10 more people I will get tomorrow. Today, yeah, it's okay. That will be my target for tomorrow. Anybody has any question? If anyone, any of you are new here, try to stay with me for some days, then I guess that you'll get more important thing from me. Okay, could you please explain a little what will be do after huge Sunday new week opening gap? Amaslama, it's not possible, brother. It's not possible, because without the huge new week opening gap, explanation is really difficult, because that's kind of instant decision. Depending on that new week opening gap, price makes a new pattern depending on that new day opening gap, okay. There can be thousands of the possibilities for price run, thousands of the possibilities. Okay, so if I just mark something as a new week opening gap and I start to explain, it will be thousand way. You won't get anything, and I won't be able to explain everything. So yeah, I hope you'll understand, brother. So I have to wait for that new week opening gap. But if I ever see that type of new week opening gap, I will try to explain depending on that price action. Okay, what market is going to do. Now, I'm not 100% right. I can be wrong. I can be wrong perfectly. So if you are doing the live trade, please do your own analysis and do it by yourself. Don't depend on my analysis, please. That's a request. Okay. So basically, it's all about hunting the liquidity and near liquidity for most the time. Absolutely, brother. Yeah, Patel. Yeah, it's all about liquidity. As I told at the beginning of streaming, liquidity is everything. Market is just going for the liquidity. There is nothing. No fair value gap. I mean, internal liquidity, external liquidity. I don't care about anything. I just know market is going for relatively equal highs, relatively equal lows. If there is all-time high, that is always the obvious liquidity. The market is going for that. Otherwise, it's always going for relatively equal highs or the double top, triple top, fourth top, or the relatively equal lows, double bottom, relatively equal, I mean, triple bottom, something like that. That's all, brother. Great analysis, brother. I think it will reach the daily optimal trade entry level before going higher. It can happen, brother. Sir, it can happen, brother. How many previous new weeks opening gaps or new days opening gaps do you use? Okay, for new day opening gap, you have to keep them for 1 week. Okay, 7 days. For new day opening gap. For new week opening gap, you have to keep them for 5 weeks, at least 5 weeks. If you are more conservative, then you can use them until 6 or 7 weeks. You can use them, okay? But yeah, I love to use them for maximum 5 weeks. But ICT told you can use them 6 to 7 as well. ICT use them for 5 weeks, but sometimes he also use for 6 or 7 weeks. So this is kind of your decision, what you are going to do. How much percent do you risk per trade a funded account? Uh, 2K, actually, I don't see that in the percent way. I mean, 2%, 1%, 0.5%. No, I don't see it like that way because I can't do that. I can do that if I go for the micro NASDAQ, but when I'm trading mini NASDAQ, it's nearly impossible for me. So I actually do on thing. Okay, I go for my maximum handle stop loss. So I try to keep my stop loss below 17 handle. 17 handle means near about $340. So just go for $20 for the example. So $20 is equal for $400. Okay, I'm using the top step 150K account, also the 50K express account, but 50K I'm not going to give you the example. I'm going to give you the example for 150K account. So one trade, if I take a loss, it will be $400. I'm able to take three loss in a row in a day. Maximum three loss. When I will touch near about thousand to $1,200, I'm done. Okay. When I trade by myself, this is for that, not the live streaming one. $1,000 to $1,200, I take a loss in a day, I'm done. Until I hit that maximum loss limit, I'm okay. So near about 60 handle. Okay, until I don't take 60 handle loss, I'm okay. If I get 50 handle loss, then I will try one more time to mitigate all of my loss. All I don't do is I don't go with over leverage. Okay, so maximum time I stay with one contract, maximum two contract. Very rare I go for 3 to 4 contract. Maybe one or two time I go for 5 contract in a year. Okay, in a year, 1 to 3 times, maximum 2 to 3 times I go for 5 contract. My maximum contract limit is 15 contract. I don't go more than 5 contract. Even 5 contract is rare. So most of the time I go with one contract or two contract. Maximum two contract or one contract. Maximum time. Okay. Yeah, brother. I understand bias, but well, but I have problem with trade execution. From which level should I execute trade? So Vinod, I am explaining that every day. Okay, so just come to my live and I will outline that. But don't just, if I ever push my button, don't push your button. That's my request. Because the one I push my button, I don't look for the best setup. I have lot of things, and depending on them, I most of the time I push my button. That's, I'm not going to teach you. I would love to show you the perfect setup. So please, you can watch the daily recap. I'm just making. It's hard work. Okay, so give some priority over there. So if you come to my playlist, I have just made new NQ daily recap. So all I have is 4 video: Monday, Tuesday, Wednesday, Thursday, Friday. It has to be 5 video. Why it is 4 video? And just let me check actually. Okay, over here Monday 11, 12, 13, 14. Okay, I messed up. Maybe I have uploaded one more, but I didn't actually put it over there. I will put it over there, the last video over here. So this is the 15 March. I don't know which playlist is it. I will put it into that playlist as well. So there is only 5 video. You can watch them where you should push your button or you should look for the entry. Okay, brother. This 5 video for last week. I explained everything after the price, so you can watch them, and I hope that will help you to understand for the execution, brother. Okay. Robin Hood, that's for you, brother. Mania, how you learned ICT concepts? What playlist you went through? Are you from ICT private charter group? A lot of question, brother. I am just gonna give you one answer, and that is I just studied ICT's 22 IT model, and you can say that's enough for me. Yeah, that's enough for me, because rest of all is not for learning trading. Rest of all is only because of building your own model. Some of you will tell, some of you will study the 2016 core content. That's not for understanding the price action, that's for building your own model. So the easiest model is 22 YT model, and I believe that this whole market, you can read the price depending on that model. Just depending on 22 YT model, you can read the whole price action. Everything is related with that 22 YT model or 22 mentorship. There will be 41 video. Okay, money. Mr. Lanka, how do you control emotions, bro? Winston, just go yesterday. I'm sorry, not yesterday, Friday, and see when I took a entry over here. Okay, there. Just let me go over there. I took an entry here. Price came here. So something like that. Let me show you. So from here to here, near about 49 handle. Okay. Then you guys told me to put my stop loss above that high. That's why I put my stop loss over there. Otherwise, I put it over there. I kept it over there. Then I got stopped out here, but my target was just this low. Here was my target. I don't care. When I pushed my button, I just pushed it. I don't care, is it going to hit my stop loss or is it going to hit my target profit. You have to practice that. You have to practice, okay? When you will practice, you will understand. I'm late. What about our first fair value gap concept? Ahmed Mustafa, for first fair value gap, I think we need more time. We are not ready yet for the first fair value gap. But if you watch the last video I have uploaded to my YouTube channel over here, inside this video I have already explained two first fair value gap entry. So that was the one fair value gap. You see over here, exactly over here. That is the first example of the first fair value gap entry, and later I explained the another example of the first fair value gap entry. So over here actually, here was the one first fair value gap entry. Here was another first fair value gap entry. So I explained them. You can watch them, but yeah, in details I will explain later, not now. Good job, Brian. Thank you, brother. Thanks for explanation. You are most welcome, Sergey. So guys, yeah, I'm done with the explanation, or for top down analysis. Thanks to them whoever subscribed to my channel today. And I believe if everything is okay, I'm coming tomorrow at 9 a.m. London session. I am not sure. I'm not sure about London session. If I come to my London session, I will tweet over there. If I don't come, then I will be there at 9 a.m. New York local time, and we will see how we can trade. Okay. If there is three fair value gap in MSS leg, can we consider two down fair value gap as breakaway gap and top fair value gap as entry? In this situation, where should we place out our stop loss? Okay, Robinhood. If there is a three fair value gap after market structure shift, uh, can I see example? Okay, here. Just for example, okay, one fair value gap, two fair value gap, three fair value gap. I don't care about this fair value gap. There is no fair value gap, but just think there is a fair value gap. Just for example, there is a fair value gap. I don't care this fair value gap. For me, the first fair value gap is the last fair value gap. The second fair value gap is the entry gap. This fair value gap has no job to do. It is the first fair value gap which will use if you are expecting market is going to reverse. In that type of situation, we use that first fair value gap. But when you are actually expecting lower run, I'm not going to frame my trade from that fair value gap. Here, the this fair value gap will be most important, and if you take your entry over there, you have to cover the breakaway gap. So you have to put your stop loss just above the breakaway gap. If you get stopped out, you have to frame your trade again, but that is very rare. If you get stopped out, that is very rare. Either you didn't push your button inside the session, or maybe you didn't read the price perfect way, market didn't take the buy sell liquid, or anything is wrong over there. So if everything is okay, then 99% of the time this concept works. That is called our well-known setup. Okay, so yeah, 99% of the time it works. This fair gap, I don't care. Okay, Robin. No problem. So thank you guys, and uh, I'm gonna explain one more time because some of you came late. I have uploaded this picture to my YouTube, I mean, sorry, Twitter today. I bought a car for $9,000. I sold it for $12,000. I bought it again for $11,000. I sold it again $13,000. How much did I earn? Okay. So some of you actually give me the reply. I'm not telling that you are wrong. I'm not telling that you are right. I'm just going to give my opinion. This is the way I trade. Just by this picture. See this picture? I just trade by that picture. I see I have started with $0. Okay. I closed my day with $3,000. So this is my profit. So for example, I started with 9,000, I sold it 13,000. So this is my profit. I earned actually $4,000. In between, whatever happened, I don't care. In between, I don't care. I start from here, I end here. So this is my profit. This is my just opinion. So if anybody has different type of opinion, please. I'm not telling that you are wrong. Okay. So yeah, 9,000, 13,000. At the end of the day, I am 4,000 profitable. Here, whatever happened, that means I took some entry here, take a loss, take a small profit until it go below that 9,000. That means 8,000. I'm okay. I'm okay with that. I have a maximum loss. That means even if I get little below that 9,000, for example, I went to 8,000. Still, I have $200 left to mitigate all of my loss with the profit. So something like that. So that is the exact picture I actually trade. That's why I have actually uploaded this picture, and yeah, that's the thing. Okay, whoever actually came, toxic bubba 4,000, absolutely brother, that's 4,000. 9,000 I start, I sold at last 13,000, so I'm in profit $4,000. that's that's my thing. Okay, that's my earning. This is my, yeah. Okay, yeah, but you had profit in the middle ignoring. No, no, brother. In middle you are not doing anything. Here you are not doing anything. Just think deeply, brother. You had $9,000. Now you have $13,000. In between, whatever you have done, it's not counted. You are not going to count that. For example, if you think like that way, first you have sold it for $3,000 profit, right? Then you have bought again that same car with $11,000. That means from your profit you are going to use $2,000. So 9,000, you had 9,000, you had to profit 3,000. So 9 and 2, 11,000. So you have left 1,000 profit. Then you bought again, I mean, sorry, sold it again 13,000. That means again you have done 2,000 profit. Here you left 1,000. Here you got 2,000. So 3,000 in total you have profit. No, you actually did profit for 4,000. You bought the car for 9,000. You sold it at 13,000. So in between you have made $4,000 profit. Okay, something like that. Do you understand, brother Jen? I guess you understand. Do you have any reason why trade NQ instead of mini S&P? Obviously, brother, because when market is going higher, mini NASDAQ is more stronger. Okay, he is the strongest sister. When market will reverse, that means I will get the confirmation that market is now going to fall. I will go back to mini S&P. Okay, so I was trading until September, so far I remember the mini S&P. Then I started to trade Nasdaq when it started to go higher. So I started to trade Nasdaq. When again from the weekly or monthly basis market will start to fall, I will go for the mini S&P. Okay, yeah. The price has reached the hourly fair value gap. Your hourly fair value gap need a small adjustment. No, Jack T, I'm overconfident with my hourly fair value gap. It didn't. It didn't, brother. I can't be wrong. So this candle low, that candle high, that is the hourly fair value gap, and you can see market didn't reach over there. It left that hourly fair value gap for some handle or tick or something like that, brother. Okay, so over here, this is the last fair value gap. This is the entry fair value gap. So this candle low, that candle high. This is that hourly fair value gap. Over here, it failed to tap to that hourly fair value gap. So it didn't reach over there. It need to tap over there. That's all, brother. I guess. If possible, recap again. Seriously, Fazlul Kabir, no, it's not possible, brother. It's really not possible because it's a long discussion. I'm done with that. The price has reached early. Okay, Ajakti, I gave you the answer. Ahmed Mustafa, you just retraced some messages. Okay. No, I get 5K because you sold it and for 12K, then rebought at a 1K discount and 11K, so 4K plus, and the 1K from rebuying it at a discount. Okay, Jen, I just told that, brother. Everyone has a different perception, but that was my perception. Okay, you have 12,000, you buy from 11,000, you have extra 1,000 in a pocket, then you sold car for 13,000, extra 10 plus 13, 14,000 profit, 14,000 minus 9,000, 5,000. That's cool. Mm, Cool idea, Robin. Yeah, everyone has the perception in their way, but I explained the way. I started from here, in between whatever happened in here, okay, to that picture. In here, I s- so I bought the car for $9,000, and finally I sold it for $13,000. So yeah, it's 4,000 for me. In between, if you just in my calculation, there was $3,000 profit, but I am not agree with that. I agree with 4,000 in that perception. But if something happened like that, I bought a car from $9,000. In any way you go with this logic, you have to be strict with the first line and the last line. In that logic, okay? If you are going to buy like that way, you will be same with five first line and last line. You will think it deeply, you will understand, okay? But I'm not telling that you were wrong, brother. Again, that's just my perception. I think this is the way I saw this market as well. That is the way. That's my process. Just that's all. And guys, thanks for joining to my I mean live streaming today. Thank you, the guy who just subscribed to my channel and made it 4392. And I just need eight more people to make it 4400. I believe I will get it tomorrow, inshallah. So until then, cheers.